All right, our top focus on WION Business Insights. The week started on a nervy note for global markets, with stocks in Asia and Europe in a sea of red. This was led by an uncharted steep decline for Wall Street futures on Monday. While Asian stocks spared some of the deep losses towards close, Europe opened in the red and Wall Street futures pointed to a lower open. Treasuries ticked higher as Trump's protectionist policies dented confidence in the economic outperformance of the U.S. Contracts for the S&P 500 declined 1%. Well, following the worst week for the benchmark since September, shares in Tesla fell about 3% in pre-market trading, inching towards easier than post-election gains. Most other big tech names also dropped, including AI bellwether Nvidia. However, by around midday in Asia, the pessimism was less pronounced, down more than 1% at one point. S&P 500 futures had pared that decline by half. Japan's Nikkei had flipped from a small loss to be up 0.6%. Escaping the drag from a strengthening of the safe haven yen, Taiwan's benchmark was off just 0.2% compared with 0.8% earlier. The exception, though, was China, where data showed deflationary force continues to build. Hong Kong's Hang Seng Index tumbled more than 2%, and mainland Chinese blue chips sagged 0.8%. Indian stocks also closed in the red. A big reason for the turnaround in many markets was that they had already sunk so low, with the S&P 500 touching a nearly 6-month through on Friday before bouncing back a bit. The Nikkei also closed out last week at a 6-month. Oil fell as weak economic data from China compounded a tough outlook for demand, and wider markets carried a risk-off tone. Brent traded at $70 a barrel after touching the lowest since 2021 last week. Copper also declined as investors grapple with the uncertainty of the Trump administration's tariffs. And we will keep tracking these trends for you through the day.